The Justice Department has officially closed its ethics investigation into Federal Reserve Chair Jerome Powell, removing a major political roadblock that could have stalled any confirmation proceedings for his successor. The move clears the path for former Fed Governor Kevin Warsh to potentially take the helm, a leadership shift that digital asset markets are watching extremely closely. Warsh is widely viewed as significantly more supportive of cryptocurrency innovation than the current chair, raising expectations for a substantially friendlier regulatory posture toward digital assets and blockchain finance. Traders are now weighing how a Warsh-led Federal Reserve might reshape policy on bank custody of crypto, stablecoin oversight, and broader tokenized finance frameworks in the coming months. Bitcoin is currently trading near $77,251, down roughly 0.6%, while Ethereum holds near $2,310. The Fear and Greed Index currently reads 31, signaling persistent fear across the market as investors await clearer policy signals from Washington. The Commodity Futures Trading Commission has sued New York State, escalating a widening federal-state conflict over prediction market regulation that directly threatens crypto-adjacent trading platforms. The lawsuit marks the fourth state the agency has challenged in just 3 weeks, reflecting an aggressive federal push to block local restrictions on event-based contracts. In a separate but closely watched case, 38 state attorneys general have backed Massachusetts in defending its own rules against Kalshi, a regulated exchange offering political and sports betting markets. Platforms like Polymarket and Kalshi operate in a legal gray zone where state gambling laws clash with federal commodities oversight, leaving traders exposed to sudden jurisdictional shutdowns. With Bitcoin trading near $77,251 and Ether near $2,310, both down fractionally, and the Fear and Greed Index at 31 in fear territory, regulatory fog is amplifying market caution. Legal experts warn that a patchwork of conflicting state enforcement actions could push these platforms offshore or force them to suspend United States users until courts provide clear guidance. Major DeFi protocols including Aave, Kelp, and LayerZero are urgently lobbying the Arbitrum Decentralized Autonomous Organization to release $71 million in frozen Ethereum tied to the RSeth cross-chain recovery effort. Delegates warn that the standard governance timeline of roughly 49 days could be far too slow to safely secure the stranded funds and prevent further financial complications for affected depositors. The frozen capital represents a significant sum that highlights the real-world growing pains of decentralized decision-making when large amounts of user capital are on the line. While on-chain governance is designed to be thorough and transparent, critics argue that multi-week delays create unnecessary counterparty risk for everyday users and broader protocol health across the interconnected ecosystem. The high-stakes proposal underscores how even top-tier DeFi projects must navigate complex bureaucratic timelines to resolve critical incidents before shifting market conditions or technical issues worsen and seriously erode community trust over the long term.